Very good afternoon, friends. So I hope you're all doing safe as well as healthy. Well, I've been discussing a lot about Ind AS 12, I think, in the previous month as well as in this month, and we've been discussing various facets of Ind AS 12. In the previous video, I started my discussion on the step number 4 that talks about the tax rate to be applied in calculating the DTA or the DTL. Because once you identify the taxable or the deductible temporary difference, we need to multiply it with a tax rate in order to get what is the amount of a DTA or a DTL. Now, in the previous video, I was talking about a tax rate which is supposed to be a substantially enacted tax rate, where we made the inputs with reference to Ind AS 10, that let's say, for example, a finance bill was introduced before the balance sheet date and it became an act post balance sheet date, but let's say within the cutoff period or maybe thereafter. Now, there is another aspect which we need to keep in mind when we are considering a tax rate for the measurement of a deferred tax, and that is we need to consider the manner of recovery for an asset. We need to consider the manner of settlement of a liability. Now, when we look at an asset, we always say that, for example, when you say an asset, the future economic benefits from the asset will arise on account of two factors. Either we're going to recover the economic benefits by way of sale, or we would recover the economic benefits by way of use. For example, when you look at, for example, inventory is going to be, a company would recover the carrying amount of the inventory by way of sale of the inventory. And when you look at, let's say, a PPE, the company would recover the carrying amount of the PPE by way of use of the asset in terms of production of goods and service. So let's take a very simple example to understand that the recovery, the manner of recovery in which the economic benefits would arise, how would that make an impact on the calculation of a DTA and a DTL? Let's find this out with an example. November के exams round the corner है. मई रिजल्ट्स ऑलरेडी आ चुके हैं और नवंबर 22 वाले नेचुरली अपनी प्रिपरेशन को लेके गेयर अप हो गए होंगे. तो आपके लिए अनअकैडमी पर 20% फ्लैट डिस्काउंट आपको मिलेगा सभी सब्सक्रिप्शंस पर. सीए फाइनल के ग्रुप 1, ग्रुप 2 या कॉम्बो ऑफर्स पर आप फ्लैट 20% डिस्काउंट अवेल कर सकते हैं. ये ऑफर 18 जुलाई से लेके 22 जुलाई तक है, यानी कि 22 जुलाई रात को 12 बजे से पहले यानी 11:59 PM से पहले आप मेरा कोड इस्तेमाल कर सकते हैं CAKB10 और इस पर आपको मिलेगा सीधा फ्लैट 20% डिस्काउंट. तो आप डिस्क्रिप्शन बॉक्स में आपको इनके लिंक्स मिलेंगे जहां पर आप फाइनल ग्रुप 1 या ग्रुप 2 या कॉम्बो ऑफर्स के अंदर ये सब्सक्रिप्शन प्लान कर सकते हैं. तो वे किस बात का इंतजार कर रहे हैं? आइए लेट्स crack it. We can see a very simple example. Let's say we're considering an asset and we applied the parameters, and step number 1, we got the carrying amount of the asset, which is based on the relevant Ind AS. Then the step number 2, we get the tax base of the asset, and let's say that works out at 60. So as we remember, there was a 5-step model in terms of application of deferred tax. So step number 1 is organizing the carrying amount, 100. Step number 2 is getting a tax base, that's 60. Step number 3 is getting the difference, that is taxable or deductible temporary difference. Now, in this particular case, the carrying amount of the asset is more, which means it's a taxable temporary difference, which would result in a DTL. So step number 3, we get a taxable temporary difference, that is 40. Now, step number 4, we need to consider the tax rate to be applied. Now, there could be a different tax rate which could be applicable depending, whether the recovery of the asset is by way of sale or the recovery of the asset is by way of use. So if in the tax jurisdiction, we've got two different kinds of tax rate, we need to look at the intention of the company. How would the recovery of the asset take place? So for example, there is going to be a tax at the rate of 20% if the asset is sold. And let's say, for example, the tax rate is 30% if the recovery of the asset is made by way of use. Now, if the entity concludes that yes, the manner of recovery of the asset is by way of sale, then this 40 will be multiplied with 20% and you're going to get a DTL of 8. But on the other hand, let's say, for example, if you're saying that the recovery of the carrying amount is not by way of sale, but I'm going to use the asset to recover the carrying amount of the asset, then the DTL is going to be 40 into a 30% tax rate, that's 12. Which means the amount of deferred tax asset or liability depends upon, in case of asset, the manner of recovery, whether we're going to recover the carrying amount of the asset by way of sale or by way of use, and accordingly a different tax rate could apply, and in terms of liability, the manner in which a settlement would take place. Similar kind of considerations would apply when you are going to consider a liability as well. So let me now put this in a nutshell in terms of step number 4. So there are 2-3 considerations governing the tax rate. One is you need to consider the substantially enacted tax rate. That means what is to be analyzed with reference to Ind AS 10. Second, we need to consider the manner of recovery of the asset and the settlement of a liability. And number 3, time value of money. We know that the deferred tax which we are measuring is something which will reverse at a future date, but Ind AS 12 prohibits the use of time value of money in measurement of the deferred tax. So these are the 3 main considerations to be kept in mind when we are applying the step number 4. Wait for some more inputs coming on step number 5 in the next video on Ind AS 12. Thank you for watching. Bye-bye and take care.